Hi there traders, and once again welcome back. This will be our final installment of our three-part video series on my favourite indicators. Now it will be on the MACD and how I use that to gauge momentum between buyers and sellers. So if you sit back, enjoy yourself, and like I said, grab a coffee, and I'll see you on the flip side of the intro. Hi there traders, and welcome back for part 3 of my favourite indicators. So in the first part, we went over the exponential moving averages of 20 and 50 and how I utilise that to get above the MAs for buying opportunities and below the MAs for selling opportunities. Okay, then we tried to piece together in part 2 the stochastics for buying pressure and selling pressure, trying to take advantage of when the buying pressure is shifting to the upside from oversold to overbought in relation to price action and what that means. Okay, so the third part we're trying to piece together is MACD. Now I use MACD is more or less for momentum, shift in momentum from momentum pushing down to momentum shifting from being sold to being buoyed by buyers, if that makes any sense. So what we can see here is the momentum is coming off. So momentum's on the downside. It's above the MAs. Well, the price is above the MAs, and that's signified by being above the zero line for the MACD, and below the zero line is when the MAs are down. So the 20 is below the 50. Okay, so we're just looking to take advantage of when the momentum's down for selling and it's up for buying. And like I said, if we want to be above the MAs, so essentially we're looking at zones above the zero line on the MACD for buying opportunities and below the zero line on the MACD for selling opportunities, because that will be matching up. Because I've got it set to 20 and 50, that matches up to the 20 and the 50 on the exponential moving averages. Now, I don't always have it set at 20 and 50. I did it for the purpose of this demonstration. You can have it stock standard, which is 12, 26, and 9. It works just as good. The momentum, I guess the momentum's a little bit faster, the indications. But for this purpose, I've just got it set to 20 and 50. So what I'm looking at is, like I said, is the market going from expansion to contraction back to expansion, okay? So the way I would look at this with the MACD, I've got it marked up green for expansion and red for contraction. So you can see we start on the left-hand side. The MACD has the momentum, or MACD is pushed below the zero line, okay? But what we've seen is that first pullback is signified in green. So that's basically contraction back to the MAs, and then we're expanding again when they turn red. The histogram turns red. Okay, so this is all, it's going to be, it's not something you can trade from as such, but what it does is give you good support that you're on the right side of the market when the MACD is pushing below the zero line and you've got the histograms turning red, and you know that you'll get on the right side of the market because you're looking for a selling opportunity. Okay, so when it starts to contract, you can see here this part of the histogram is going green, so the market is starting to contract. Okay, so the momentum's still down, so we don't really want to be buying there, all right, because of two reasons. The market's contraction, we don't really want to buy into contraction. We want to buy into expansion, and we're on the wrong side also for a buying opportunity. The way I set up my trades, we're on the wrong side of the exponential moving averages. Okay, so what I would be looking for, that shift in momentum, we see that first when the lines cross, when it's sort of in that oversold territory, the lines cross, and you can see that momentum's going from down to pushing up. All right, so that momentum is starting to shift. Now, what we want to see, we're looking for that buying opportunity. So you can see the momentum gradually rises until it crosses that zero line on the MACD. So what we'd be looking for there is an expansion going into contraction, back into expansion. So you can see we had that expansion there, but we didn't get the signal as such because the price action wasn't above the MAs. Okay, so we've got the price action has pushed above the MAs with this little run up here. The MACD's crossed above the zero, so that's the start of where we want to start the process of looking for a buying opportunity. Okay, so we can see that the histogram's gone red, signifying we're gone into contraction, or the mode is, or the phase of the market is going into contraction. The MACD is above the zero line, which is great. Everything's starting to line up. So we want to see was when that market starts to push back to expansion, which we got later on. And even though, like I said before, you can't trade off that histogram, you don't go, okay, it's turned green, I'll buy it, because there'll be times when you get chopped to pieces. And again, it comes down to what's happening with the price action. So this is really a tool I would use to support whether I'm on the right side or the wrong side of the market, whether I'm on the right side of momentum or the wrong side of momentum. And I piece that together, obviously, with the stochastics, the selling pressure and the buying pressure. And when I get on the right side of that as well, the last thing I'll be doing is looking for that entry. And like I mentioned in the first video, if I was looking for an entry, I might look for a break above that little minor high there, or I could look at a break above that major high. Okay, so we've got markets pushed up, it's pulled back, it's starting to push up here. So we can see, all right, the MACD is above the zero line. That's great. We're in contraction at the moment, and we're looking for the market to go to expansion. That's great. So that's 2 boxes ticked. We've had that selling pressure getting soaked up, what we can see on the stochastics, and it's got soaked up for a 3rd time. Okay, that's great. And the last piece of the puzzle where, okay, if it breaks that line there, I anticipate the market's going to go back to an expansionary phase, which it did. It did in hindsight, but that's how we would be trading it. We're looking for that anticipation that everything's starting to line up. The pressure on the buy is on the buy side, which we've anticipated from our stochastics. We know that the market is going through a contraction phase, and we're looking for it to go back into an expansion phase, and we're looking to take advantage of that by utilizing a prime entry setup, and which is what we got around this stage here. All right, so we see everything lined up quite well. The market went to expansion, and then it started to run out of steam. And that's where you get the momentum starts to shift again. It goes from positive, turning back down and turning negative. Okay, so we don't particularly want to go into a selling opportunity there. That's not the way we're trying to trade momentum. And we got also the exponential moving average at 20 is still above the 50. So we don't want to really look for a selling opportunity. We're looking still for a buying opportunity up until the price crosses back below the exponential moving averages. So what we can see, price did, it sat on top of the MAs, it went sideways. That's okay. That's okay. We've got the price is still in that buy zone above the MAs. Okay, and we're looking for the market to go contraction here. It's starting to lift, and probably all this zone here you could probably extrapolate out to be going back into expansion. All right, so we prefer it to be back above the MAs, back above the zero line. The histogram started to turn green, and we've got this expansionary phase starting to kick off about when price is trading around the 1650 mark. And that's really good. You can couple that with price action there. We know what the stochastics is doing. The buyers are starting to win out. Every time the selling pressure is getting put on, buyers are soaking up at that 1650 zone. They're happy to soak it up, and they're happy to look to higher prices. And we're just really trying to define where our entry might be. And if, for example, if we just bought it through that high there, our risk is below, which is fine. We've got our trade set up. If it breaks that high, which it did on this candle here, it's at 5 o'clock. Everything else is starting to line up quite nicely. We're going back into expansion. Our MACD is supporting our thesis. We're on the right side of the market. We're on top of the MAs, and any selling pressure is getting soaked up quite well at higher prices. Okay, so that's pretty much it. That's how I would piece the 3 together. Now, I hope that helps. If you do have any questions later on that I can ask, once you've watched the videos, the set of 3, even if it's on each individual section or any of the sections that we just mentioned, part 1, 2, or 3, feel free to send us an email and I'll get straight back to you. Thanks for joining me, and we'll speak to you again soon. Well, we hope you enjoyed that, traders, and thanks very much for listening. Remember, if you did like our video, please subscribe to our YouTube channel for more great content, and sign up to the website to get access to all our premium videos for free. Speak to you again soon.